A DSCR loan, which stands for Debt Service Coverage Ratio loan, is a type of non-qualified mortgage, non-QM, designed primarily for real estate investors. This loan allows investors to qualify for a mortgage based on the cash flow of their rental property rather than their personal income. It's also known as an investor cash flow loan. Imagine you're buying a house that you plan to rent out. Instead of looking at how much money you make from your job, a DSCR loan looks at how much money the house will make from rent. It's like the bank is saying, okay, will this house earn enough money to pay back the loan we give you? If the answer is yes, you're on the right track to getting a DSCR loan. It's a cool option for people who want to invest in property but might not have the usual paperwork like pay stubs or tax returns that banks usually ask for. This is particularly advantageous for investors who may not have a consistent personal income but own income-producing properties. How they really work in practice. Let's say you find a cute little duplex that you want to buy and rent out. You do the math and figure out that the rent from both units will be $2,000 a month. Your monthly loan payment, including taxes and insurance, will be $1,600. So, your DSCR is 1.25. $2,000/$1,600 equal 1.25. That's a good number, and it could mean a lender will give you the thumbs up for a loan. In a nutshell, DSCR loans are a bit like having a golden ticket for real estate investing. They come with some great perks but also some extra costs and considerations. As long as you're aware of both sides and do your homework, they can be a fantastic tool to help you build your property empire. How to qualify for a DSCR loan. Debt Service Coverage Ratio, DSCR. Lenders generally look for a DSCR of 1.25 or higher, which means the property's income is at least 25% more than its debt payments. However, some lenders may be flexible with this ratio depending on other factors. Credit score. A minimum credit score is often required, with many lenders looking for scores around 620 or higher. A higher credit score can lead to better interest rates and terms. Down payment. Investors may need to provide a down payment, which can vary but is often around 20 to 25% of the purchase price. Some lenders may offer lower down payment options for borrowers with strong credit profiles. Property type. The property must be capable of generating income, such as a rental, commercial, or multifamily property. The loan is typically not available for primary residences. Cash reserves. Some lenders may require borrowers to have cash reserves to cover unforeseen costs or vacancies. Property value. The appraised value of the property is a crucial factor for lenders when determining loan eligibility. The property's value must support the loan amount. Investor experience. Some lenders may have stricter requirements for inexperienced investors, preferring those with a track record in real estate investment. Loan-to-value, LTV, ratio. Lenders may require an LTV ratio below 80%, meaning the loan amount cannot exceed 80% of the property's value. Documentation. While DSCR loans are known for lighter documentation requirements, lenders still require certain documents such as bank statements, appraisals, and leases to determine a property's potential income. Lender specialization. It's important to work with lenders who specialize in DSCR loans, as they will be more familiar with the process and can offer tailored advice and services. By meeting these criteria, real estate investors can leverage DSCR loans to finance their investment properties, often with more flexibility and less personal financial scrutiny than traditional mortgage loans. DSCR Loan Multifamily. Let's say you're dreaming bigger and want to invest in a multifamily property, like an apartment building. A DSCR loan can be your best friend here, too. Multifamily properties are great because they have multiple units to rent out, which means more income potential. Lenders love this because it reduces their risk. The more money the property makes, the happier they are to lend you the funds. Just like with any property, you'll need to show that the income from all those apartments or units can cover the loan payments. Multifamily properties can be a bit more complex to manage, but they're a great way to scale up your real estate portfolio and income. Where to get a DSCR loan. DSCR loans are a bit special because they're not your typical home loans. They're designed for real estate investors, so you won't find them at every corner bank. Here's where you can start your search. Specialized lenders. Companies like JMac Lending and OfferMarket are known for their DSCR loans. They understand real estate investing and can offer tailored advice and services. Commercial banks and credit unions. Some traditional financial institutions offer DSCR loans, especially those with a focus on commercial or investment property lending. Online platforms. Websites like Private Lender Link and Credium provide directories or platforms where you can find lenders offering DSCR loans across the United States. Mortgage brokers. A broker experienced in investment properties might have connections with multiple DSCR lenders and can help you find the best deal. Current interest rates for DSCR loans. Interest rates for DSCR loans can vary widely based on the lender, your credit score, the property's income potential, and market conditions. As of the latest information, rates can range from around 7.499% for certain investment property loans up to 8.99% for more specialized products like SBA loans. It's important to note that DSCR loan rates are generally higher than traditional mortgage rates due to the perceived higher risk by lenders. Keep in mind, rates are always changing, so it's crucial to get quotes from several lenders to find the most current rates. DSCR loan application process. Applying for a DSCR loan is a bit different from a regular mortgage. Here's a general outline of the process. Before applying, gather information about the property you're investing in, including expected rental income and any expenses. Use the sources mentioned above to find lenders that offer DSCR loans and compare their terms and rates. Fill out an application with your chosen lender. You'll likely need to provide details about the property. While you won't need to show your personal income, you'll still need to provide some documents. This can include bank statements, property appraisals, and possibly information about your LLC if you're buying under one. If everything checks out, the lender will approve your loan. The closing process then follows, where you'll finalize the loan and take ownership of the property. Remember, each lender might have slightly different requirements and processes, so it's important to ask questions and understand what's expected before you dive in. Benefits of DSCR loans. Alright, let's chat about the cool perks of DSCR loans and why they are pretty awesome for folks looking to dive into real estate investing. Super easy to get into. First off, getting your hands on a DSCR loan is like walking through an open door. These loans aren't too fussed about your personal bank balance or job situation. Found a property that's going to rake in some good rent? That's your golden ticket. Plus, you don't need a mountain of cash just sitting in your bank to get started, which is great news, especially if you're rocking it solo or running your own gig. Less paperwork, more peace of mind. Nobody likes drowning in paperwork, right? Well, with DSCR loans, you can breathe easy. Since the loan is more about the property's cash flow and less about your income, you won't need to dig up every financial detail of your life. This means you can skip the headache of proving your income or detailing your job history. Less paperwork equals less stress. Speedy process. With fewer documents to shuffle through, the whole application process speeds up. You can zip through the application faster than a conventional loan because there's less for the lenders to comb over. This means you can get to the good part, like actually investing in property, much quicker. Dream big and buy more. Here's where it gets really exciting. With DSCR loans, there's no cap on how many properties you can invest in. You don't have to fully pay off one property before you jump into another. This is perfect if you've got big dreams and want to grow your real estate empire at lightning speed. Great for newbies and pros alike. Whether you're just dipping your toes into real estate or you're a seasoned pro with years of experience, DSCR loans are your friend. Since the focus is on the property's income potential, your personal income takes a backseat. This levels the playing field for everyone. Flexibility in property types. Got your eye on a cute vacation rental or a long-term apartment complex? DSCR loans have got you covered. They are flexible enough to fund a variety of property types. Whether you're into short-term rentals like Airbnb, long-term leases, or even commercial spaces, approval based on the deal. Sometimes, you stumble upon a deal that's just too good to pass up, even if it doesn't tick every single box on the application form. The cool thing about DSCR loans is that real people review your application. They can give the green light to deals that are solid, even if they are a bit outside the usual criteria. This means you won't miss out on those golden opportunities just because of a technicality. Disadvantages of DSCR loans. A bigger slice up front. When you're getting a DSCR loan, you'll need to put down a pretty penny at the start. We're talking about 20% or more of the property's price. That's a hefty amount, and not everyone has that kind of cash lying around. It's like saving up for a really expensive bike. It takes time and not everyone can do it right away. Saving for a rainy day. Some DSCR loans ask you to have a safety net of cash that could cover 6 months of loan payments, just in case. It's like having an emergency fund in your bank. But let's be real, not everyone has that extra cash tucked away. And that can make things tricky if you're trying to get one of these loans. Borrowing limits. With DSCR loans, the amount you can borrow is usually between 75% to 80% of what the property is worth. So, if you're eyeing a property, you'll need to cover the rest with your down payment. It's a bit like only being able to fill your gas tank 3/4 of the way. You'll need to make sure you have enough to get where you're going. Making the grade. To get a DSCR loan, your property needs to earn a good grade on its income report card. A score of 1.25 is good, and 1.5 is even better. This means the rent needs to be enough to pay the loan and then some. In pricier real estate markets, getting these numbers can be like hitting a home run. It's not easy, and not every property can do it. Paying more each month. Interest rates for DSCR loans are usually higher than your standard home loan. Think 7% to 9%. That means your monthly payments will be higher, too. It's like choosing the premium streaming service instead of the basic one. It has its perks, but it'll cost you more each month. When the house is empty, if your property doesn't have tenants yet, it's harder to show the bank how much money it will make. It's like trying to sell lemonade when you haven't even built the stand yet. Lenders prefer to see that you've got renters and a steady flow of rental income coming in. Early payoff penalties. Lastly, because DSCR loans aren't backed by the government, if you decide to pay off your loan early, you might get hit with a prepayment penalty. It's like getting a fee for returning your library book before it's due. Not fun. So that's all for today. If you want to know more about this loan, please comment.